A very good afternoon to one and all present here, and a warm welcome to today's webinar on BRSR, New Elements and Assurance Readiness for Corporates, which is jointly organized by WP and GC. First of all, thank you everyone for joining us today for this insightful session on SEBI's Transformative Reporting Framework, the Business Report Responsibility and Sustainability Report, which is also popularly known as BRSR. SEBI's BRSR framework guides Indian businesses in integrating ESG into their operations as well as their disclosures. And mandatory compliance for the top 1,000 listed entities enhances transparency as well as help them to build stakeholder trust, mitigate risks, and promote sustainable growth. On the other side, assurance further helps companies to ensure their accuracy and reliability of the information that is being reported in the BRSR. Now, let me take you all through the today's program schedule. So here are the five major components that we are going to touch upon during today's webinar. First of all, BRSR, which is Business Responsibility and Sustainability Report. Then what are the suggested best practices for principle-wise disclosures? Moving on with BRSR core and the new KPIs that have been introduced by SEBI. Moving further with BRSR reporting scenario for top 150 companies as to how they have performed. And last but not the least, and very important component is BRSR assurance and the preparedness of the companies, which entails enhancing the transparency and credibility in sustainability reporting. So let's meet the organizers and experts. So firstly, WyattPrism. WyattPrism is a leading Indian stakeholder reporting agency, which comes with the 15 plus years of experience, and it has served over 300 plus clients across different industries, and it holds its specialization in making integrated sustainability, CSR, and ESG reports. It has pioneered integrated reporting for the listed companies in India in 2017, and its reports also holds a position in Global Top 100, which showcases their excellence in stakeholder communication. On the other hand, GC Advisory, which was founded in 2009, is a leading ESG, sustainability, climate, and energy advisory firm, which has served 250 plus clients, not just in India, but also covering Southeast Asia. It has 30 plus experts and it offers tailored solutions in engagements like materiality assessment, strategy, performance improvement, and stakeholder engagement. And the team is backed by expertise in sustainable development, climate change, energy, and responsible finance. So today we have two speakers from the field of ESG and assurance. Dr. Kiran Paradkar, who is the Director of Sustainability at GC Advisory, holds a PhD in chemistry and she's a HR MBA with over 25 years of experience in research and development and the sustainability domain. She has 15 plus publications to her credit and published in SCI journals. And she also guides clients across diverse sectors, which includes mining, insurance, energy, textile and apparels, manufacturing, pharmaceuticals, etc. And we help them through the diverse range of reporting engagements under her leadership. And today she would be taking us through the BRSR and BRSR core components and the performance of top 150 listed companies. Next, we have CA Aniket Eram. Mr. Aniket Eram, Chartered Accountant and BRSR certified professional who carries over 13 years of experience in internal audit, compliance, risk management, and sustainability reporting. Is also a member of the ICI, which is Institute of Chartered Accountants of India, as well as he holds the certificate on business responsibility and sustainability reporting, BRSR, from ICI. And his specialization is in advising and assuring corporate sustainability disclosures. Today he would be taking us through the components of assurance and what are the roadblocks and how a company can prepare for its assurance to make it a successful engagement. We'll quickly go through the webinar's code of conduct. So these are some of the simple pointers that everyone should keep in mind throughout the webinar. All the participants are requested to keep their microphone muted at every given point of time. Please use the Google form link that has been provided in the chat box to post your question so that none of your question is missed. And you can use the chat box for any other challenges that you might face during the webinar. Kindly wait for the moderator to open the Q&A session after the uh, entire flow of the session is completed. We'll have a Q&A session. And we kindly request you not to record, screenshot, or share the webinar content without the organizer's prior permission. And the session will be soon posted on our YouTube channel by the name of GC Advisory. You can kindly access it from there if required. And we would also like to have your feedback after the webinar on the email ID given here, which is info@general-carbon.com.
Good afternoon, one and all. Myself, Dr. Kiran Paradkar. Kindly excuse me for my sore throat. I'll be, taking you through the significant elements of BRSR and BRSR code. For the ease of, better network coverage, I'll close my camera. Thank you. So, when we talk about stakeholders, businesses mean mostly, investors and the communities in which they operate. Otherwise, stakeholders for businesses means community, their employees, their investors, the NGO partners, and a whole lot of people who get impacted by their business, who are aligned to their business. So when we look into the stakeholder needs and investor needs, what we come across is that everyone is increasingly looking for transparent disclosures. So BRSR per se, comes across as a trust building mechanism wherein, you can showcase your ESG performance in a very transparent manner for fostering bigger confidence. Effective BRSR disclosure will also provide an insight to the reader into the company's risk management strategy. So by, looking into your responses, stakeholders will be readily able to understand on how do you identify, assess, and mitigate your associated risks. Not only that, just, showcasing your performance is not going to satisfy the stakeholder community, but they also look for long-term value creation. So here, when you, respond appropriately into the BRSR disclosure, you not only, let them know how you're going to create value, but you also demonstrate that, how you are investing in sustainable practices for a future that is both profitable and resilient. Now, for doing all of this, you need some performance metric. And these performance metrics, must be effective enough to showcase your progress year on year. It should be, quantifiable, which will allow the stakeholder and investor community to track your progress and assess how effective you are in your sustainability initiatives. Not forgetting the compliance part of the practice. Here, investors and other stakeholders expect companies to adhere to all the local and applicable regulations pertaining to ESG and sustainability, and they are also interested in knowing if you have been penalized or you have been receiving any legal notices to the effect that something went wrong into your business and what you did to correct it. So ethical and legally compliant businesses is what investors and stakeholders are looking into today. So from investors' point of view, when it comes to non-financial disclosures, so far, the notion was that investors only want to look into the financial performance of a business. Not so anymore. Nowadays, they want to look into the non-financial disclosure also. So when EY conducted a survey in 2021, which covered around 300 institutions, institutional investors around ESG performance, we get a striking, percentage wherein 98% of the investors were, surveying or evaluating all the non-financial disclosures, either formally or informally, through various backgrounds and various, means. 83% of the investors, considered formal frameworks as necessary for assessing long-term value, like your disclosures in public domain, your websites, and any documentation in public, that is made available to them so that they can review and assess your ESG performance. Also, 75% of the investors, found value in assurance. So 75% of the investors think that if your sustainability performance is assured, then it is robust, including the climate risk part of it, so as to create better financial resources for you in future and to foster more confidence. So now coming to the BRSR and its elements. BRSR, as we all know, is divided into three sections: Section A, B, and C. Section A talks about the general disclosures, wherein you disclose about the products and services, the operations, the employees, any subsidiaries or joint ventures that you have, the CSR initiatives, and compliance part. For Section B, the companies are supposed to, disclose on management and process disclosures, majorly the governance part of your business, wherein it is expected for you to disclose the policy and management processes that you have in place, the kind of code of conduct you have in place, and the leadership and oversight when it comes to ESG and sustainability. Now, this is very important because, merely having policies in place and saying that we have n number of policies in place is not going to help anymore. The stakeholders also wish to understand how the top management or the top leadership is involved in aspects that deal with ESG and sustainability. Section C, asks principle-wise performance disclosures, and we know that there are 9 principles, NGRBC principles, along which questions are framed. These questions are, bifurcated into essential indicators and leadership indicators. So essential indicators generally ask about the training programs that you conduct, the environmental data on energy, waste, and emissions, your scope 1 and scope 2 emissions, the social impact that businesses, may make on community. Leadership indicators, whereas, go one step ahead and ask about important aspects such as life cycle assessment of your products or services. How do you manage conflicts? The biodiversity part of your business, the scope 3 part of your business, and the supply chain part of your business. So when we look into the key insights and the current state of BRSR at corporate India, what we see is, some very striking observations we have. So for example, differently abled workforce, which is asked under Section A of general disclosures. 2.2% is the nation's population which comes across, as differently abled. When we see them as employable, we see only 0.5% is, employed effectively. When we come into energy consumption, which is, part of Principle 6 essential indicator, Scope 1 and Scope 2, we see that nearly all companies, majorly 96%, have reported on energy consumption for FY23 and have also reported achieving 13% reduction in energy use per unit of revenue as compared to the previous year. Now let us come to emissions. Majority of the companies, 94%, have reported that 14% reduction in carbon emissions per unit of revenue could be achieved when it came to Scope 1 and Scope 2 emissions. Let's talk about external assurance and value chain assessment. This is, very pleasant surprise that although not mandatory in the year FY 2023, almost 1/3 of the companies conducted external assurance of environmental data voluntarily, and 25% of companies assessed environmental impacts within their value chains. So this comes across as a very pleasant step, wherein we understand and imagine that companies are, taking what it takes to get ready, to get assured, and to, disclose transparently. Sourcing from MSMEs is, another question in Principle 8 essential indicator, wherein, we understand that two-thirds of companies have reported sourcing from MSMEs, and it has increased to 19%, from 19% to 22% in the 23 FY23 disclosures. So this increment is also important, although it appears small, but it does display that organizations are taking efforts to, go that distance and include MSMEs into their business model. Now, there are some new developments also. There are certain circulars by SEBI and certain interpretations around the circulars. So on 14th of June 2023, SEBI introduced BRSR Core. BRSR Core introduction, was this does not come as a shock. It comes as a by the by thing, because SEBI wants, to portray India on a global scale so that investors across the globe can compare the ESG data of Indian companies to, all the global other companies. On 12th of July 2023, SEBI issued a framework giving the details on the disclosure and assurance requirements for BRSR Core. So SEBI has gone one step ahead and said that, you're not only going to disclose your data, but you're also going to get it assured. And definitely so, because to foster more confidence and to bring into more investors, to attract more investors, and assured data will go a long way. Applicability of BRSR Core, as we know, the top 1,000 listed entities will have to provide BRSR Core disclosures as a part of their annual report in the BRSR format from FY23-24. Now, when it comes to, mandatory part of the value chain, we understand that top 250 listed companies by market cap will have to disclose about their value chain from 24-25 on either a comply or explain basis, which means that, you gather the data and you give it out, or you explain why you could not, give such kind of data. When it comes to BRSR Core reporting format, in its 12th July 2023 circular, SEBI has given Annexure 1, which talks about the measurement, the kind of data that will be needed, and the approach for each attribute. So when you look at Annexure 1, you understand that, what kind of data is required and how it can be sourced and how it is even linked to the primary indicators of BRSR. Now, there are few suggested best practices, When it comes to principle-wise disclosures, we must know and we must keep in mind what are those best practices which will, enhance our reporting. For example, Principle 1, which is governance-based and talks about ethics, transparency, and accountability for a business. Suggested best practices include that, having a code of conduct, which is, available in the public domain for all the stakeholders. Whistleblower and grievance mechanisms, strong mechanisms, which indicate that the businesses are fair enough, and disclosing board oversight on ethics, because it becomes the culture of the organization, what trickles down from top to bottom. Now, coming to Principle 2, which talks about life cycle assessments, definitely businesses should assess their environmental and social impacts. They must adopt sustainable practices, and product stewardship KPIs must be in place. For example, if you are a manufacturing company which is, very high on packaging, then year on year you should try to see that how you can, change the conventional packaging by improving or increasing the share of green packaging into your current practice. Principle 3 talks about employee well-being. So please disclose your diversity, equity, and inclusion metrics. Show how you are progressing on this metrics year on year, or from a benchmark year to a target year. Also provide comprehensive benefits that you give to all your employees, apart from the mandatory benefits that the employees are entitled to. And please implement robust training programs so that, you can disclose transparently that you are really taking care of your employees' well-being and giving them all the skill enhancing environment that they deserve to climb the succession ladder. Stakeholder engagement is what Principle 4 seeks. So, businesses are expected to map their key stakeholders along with the concerns. There has to be a mechanism in place which clearly and concisely talks about stakeholder engagement and how the concerns of these stakeholders are dealt with. Also, stakeholder grievance redressal mechanism must be, uh, given out in a subtle way so that the reader understands that what kind of transparent mechanism exists at a entity level. Then conduct periodic engagement surveys to understand what your stakeholders want and how satisfied they are with the kind of mechanism that you have for dealing with their grievances or concerns. Principle 5 asks for a very important aspect of human rights. As we rightly know that human rights is, for a long time now a hot topic on the ESG landscape. So please implement policies that are aligned to UNGC's business and human rights principles and ensure that even supplier compliance with human rights standards are met. So do not just limit it to your own business, but please ensure that your suppliers, to begin with, at least your tier one suppliers, are following, basic human rights such as child labor, forced labor into their premises and ensure that no such violation of human rights happens across the value chain. Coming to principle 6, which asks about environmental sustainability, businesses are, supposed to disclose on their GHG emissions, energy usage, and water usage. Now, although we know that essential indicators ask only about scope 1 and 2, it will be a good practice to, deep dive into scope 3 emissions. At least, begin with the basic scope 3 categories like employee commute and business travel to understand your emission scenario. Set science-based targets for environmental impact reduction, not only to align with India's NDCs, but also to assess the global goal of, controlling the temperature to 1.5 degrees Celsius scenario. Commit to circular economy practices so that, you encourage the sustainable business practices. Principle 7 asks about responsible public advocacy. So please, join industry associations. It is expected that businesses should, not keep the business to themselves, but, go out and have wider circles wherein they associate with various bodies for positive policy advocacy, publish transparent lobbying and CSR activities, and advocate for sustainability initiatives so that it is a win-win situation for all. Principle 8 asks about inclusive growth and development. So businesses are expected to highlight the impact of CSR initiatives with metrics. Now here CSR does not only mean that, just give out money for some social cause. Businesses should have a vision for CSR and they should do some meaningful CSR which, not only aligns to their vision but also stands out as, something that actually can be beneficial to the community and the wider society. So please invest in meaningful CSR. If possible, calculate the social return on an SROI, social return on investments, to understand the impact of your CSR initiatives. Engage in community development projects. Foster skill development in underserved regions. Principle 9 asks about customer value. So businesses are expected to ensure transparency in marketing and product information. Please do not, label anything that is not applicable to your product or service so that, the end user understands exactly what is being marketed. Implement mechanisms for customer feedback and data protection so that feedbacks are very valuable in, improving your own services or products. Focus on customer-centric innovation as to understand the sentiments of the customers as to what they actually want and try and focus on giving what exactly they want. Now coming to core KPIs, there is a lot of discussions around core KPIs, how to fill in the core KPIs, because core KPIs will also undergo assurance. So there are some additions that have been made with respect to the parameters of the essential indicators to incorporate the KPIs. So what SEBI has done is that it has, although introduced 9 new KPIs, it has ensured that majority of them are partially answered into the already existing indicators, and it has distributed them between principals so that easily, people can take care of this KPIs. Now, for example, let us talk about principle 1. It talks about the governance part. The parameters that are expected are, number of days of accounts payable, concentration of purchase and sales with trading houses. So now this is a new requirement that has been given by SEBI under the core attribute of fairness in engaging with customers and suppliers. So I will give this one example of fairness in engaging with customers and suppliers. So, the formula provided calculates the number of days of accounts payable, which is a key metric to understand how long a company takes to, on an average to pay its suppliers for goods procured. So it is accounts payable multiplied by 365 upon cost of the good. So this metric, why this is important? Because this metric helps, to assess the company's cash flow management and supplier relationship strategy also. The purpose as to why this core attribute was introduced was cash flow management understanding, because longer payable days allow the company to hold back to the cash for a longer period, which improves its internal cash flow. And supplier relations, in the sense that shorter payable days indicate that company pays its suppliers promptly, which fosters better relationship with its suppliers. Now, this KPI also has implications. If a company's payable days increase significantly, without corresponding improvement in its liquidity, this indicates that there is a cash flow issue across the business. So, the stakeholders, when they look into this KPI, they can easily understand how the business is performing with respect to cash flows. Conversely, if there is a significant decrease in the number of payable days, it indicates that, there is an improved cash flow and faster supplier payments are being done. So this metric is especially valuable for those companies which are aiming to balance the liquidity while trying to, maintain strong supplier relationships. So every core attribute is beautifully aligned with, some intrinsic meaning, so that the stakeholders can, understand how a business is performing when it comes to sustainable business practices. For instance, enhancing employee well-being and safety. We are not new to this. Essential indicators does ask about this. But going one step ahead, if you can, give out the number of trainings, including your permanent and other than permanent staff, then you will be, disclosing transparently that you are taking care of all those stakeholders who, work under your premises, and you care for their well-being and safety. So not only mandatory trainings, but some other trainings which can increase their understanding when it comes to workplace safety. Enabling gender diversity in business, we all understand that nowadays diverse, businesses fare better than those who focus only on one kind of gender. Obviously, now how gross wages paid to female as a percent of total wages, can become a measure of, this attribute. Definitely, if you are paying out more wages to females as a part of total wages, it means that you are giving them better employment opportunities, and more number of women are in leadership roles. Plus, many women are there in other associated roles when it comes to your total employable employee count. So all are linked, beautifully to arrive at an end result, whether you are focusing on sustainable practices or not. Next, please, Dinesh. Yeah. Likewise, similarly for energy footprint, for water footprint, for GHG, for embracing circularity, all of these, contribute in one way or other to understand the sustainability and ESG aspects of a business. For example, purchasing power parity is a beautiful indicator which allows, India to compare itself globally with other entities and see that how we are faring in terms of, our output. For example, let us say that a cola company in India is, using 1,000 liters of water to produce X number of bottles, and is selling, and total sale is 1,000. The total, sale. So 1,000 by 1,000 gives us the intensity of 1. Now the same cola company in USA, withdraws same amount of water, 1,000 liters, but total sale is $25. Now assuming dollar value to be 80, you get 2,000 rupees. So when you divide the water usage by the revenue, you get zero point 0.5 as the BPP value. Now, does this mean that we are losing out and they are gaining? No, this does not mean. This means we are at par when it comes to PPP, because the commodity value in USA is slightly costlier than what it is in India. So such comparisons help us to align beautifully on a global platform and to assess how we are progressing when it comes to our revenue generation across our businesses in a sustainable manner. Next, please, Dinesh. So, multiple stakeholders face multiple challenges when it comes to BRSR reporting. It will take some time for all the stakeholders and businesses to, completely align and, smoothen out this flow by, removing certain creases. For now, generally, when we say there are challenges, what we mean is there are complexities when it comes to data consolidation. As multiple stakeholders are involved functionally, it becomes very difficult to consolidate the data. And therefore, having a robust data template is the first requirement when we talk about BRSR reporting. Handling frequent changes in single point of contact is another, trouble which businesses face when it comes to such kind of reporting. For example, a person who has been handling the data on energy consumption, for last 3 years, suddenly, either is shifted to some other department or decides to leave. So the new person who comes in the place finds it little challenging to, align, to smoothen this process further. Not only this, compliance and legal data, for example. So unless and until you have effective ESG framework and you identify the policy gaps, you will not be able to, completely align with the compliance requirements of the format. When it comes to environmental data, there are many gaps. Businesses say that, we don't know where to get this data from. So the challenge begins by explaining to them that from where to get this kind of data. So recording the exact required data becomes the first mandatory, step when it comes to BRSR reporting. Scope 1 and scope 2 data, many people, they think that, having an electricity bill in place is going to help me out. But where from it is coming, how do you, channelize it? How do you maintain it year on year in the monthly format? Are all the challenges, that needs to be sorted out. HR data is the biggest trouble, because employee turnover, right from the definition of the age, what does it mean when we say 30 to 50? The challenge begins from there. So do we mean that we stop at 29 and we begin at 30, and should we stop at 49 or 50? So there are the challenges and understanding are also there. So people have tough time in managing HR data also. Then many times what happens that training sessions are conducted, but their records are not kept promptly. For example, the company may claim that 100 people have attended, this training program. But when you actually look into the training register, you come across only 50 signatures. Then they say that, these had joined jointly, these had come together, only one signature is there. So, this all are small little things which need to be taken care when it comes to data management. Value chain data also, is a big problem, because businesses have multiple value chain partners. So maintaining such a huge database is a very big challenge. That is why it is always advisable to distribute or bifurcate your value chain partners into tier 1 to 3 depending on the revenue or specialty, or whatever you think is a feasible idea of bifurcating them, and begin with at least tier 1 suppliers so that rest of the things can fall in place. And community data also, people say that we are aligned with NGOs to conduct such and such CSR, but when we actually ask them the impact, then none of them has conducted any SROI, for example. So unless and until you have no such things in place as a social return on investment, you will not be able to understand the impact of your uh, social or community uh, uh, investments. Apart from this, there are certain learnings which we get from NSE's observations. Like NSE says that there is people provide website link instead of a specific document link. So for example, if you are giving the link of your human rights policy, please do not take people to your website by saying that it can be found there, and then people keep on browsing your website to look into the HR policy. Please directly provide the appropriate link then and there so that exactly people can go into your human rights policy and read. Now when actual turnover rate is asked, please do not give overall turnover rate. R&D and capital expenditure is the question which troubles everybody. Now, majority of the businesses, when we ask them that, please, fulfill this question, they say it is not applicable. Not applicable cannot be the answer, because you will have to have a CapEx arrangement for your sustainability initiatives. Although CapEx is a one-time activity, but at least for next 5 years, you will have to have a CapEx in place to ensure that, whatever are your ESG targets, that, are taken care by the CapEx. And R&D is an element which, keeps on happening year on year. So the answer to this cannot be not applicable. So this also is a challenge when it comes to R&D and CapEx data. Now, percentage of employees or workers covered under maternity benefits. So this is the biggest challenge we as consultants also come across when it comes to answering the BRSR. Now, people actually, businesses give out the number of male and female employees who had taken these leaves. Whereas what it is asking is percentage. First of all, understand the question. It is asking you the percentage. All 100% are, eligible for maternity or paternity benefits. Then when it comes to, number, please give number. So please, appreciate that whatever is to be disclosed qualitatively, please write crisp and applicable statements. Whatever is to be given in a number, please provide the number. Whatever is asked as a percentage, kindly provide only the percentage. There's no need for us to, write long statements saying that this is there, this will be taken care like that. No need at all. So these are, certain data gaps or, certain misunderstandings which happen when we fill the BRSR formats, wherein, exact response many a times is not given out. So then value chain considerations for top 250. What are the challenges as we discussed just now? Lack of ESG data accuracy and representation. Who takes the accountability of, maintaining the data? So there has to be a definite SPOC or a group of people who are, held responsible for that kind of data accuracy, maintaining the accurate records. There should not be any hesitancy in information sharing, just so that, whether I should be giving out this data in public domain, and if I give out, what if? So please understand that, all these questions will help you to improvise on your sustainability practices. And because this question is framed generally for everybody is expected to give out the best possible response. Lack of dedicated ESG teams, yes, this is another challenge. At many businesses, the HR or the CSR looks into the ESG. That's not how it is. Businesses must have dedicated ESG team which can align with HR and CSR teams to see to it that the ESG agenda is taken care of. So when we see value chain, what are the key considerations? Definitely, they are the upstream, value chain partners like suppliers, raw material suppliers, and your vendors. Downstream, we mean that your distribution channels and logistics, your life cycle and user impact, your recycling, reusability, and how you dispose your waste. Operational considerations include your production process, how green you can make it, how efficient you can make it with respect to energy and water management, and how better you can make it with respect to emission reduction. So the key components of value chain definitely include communication of the objectives of BRSR across your value chain. First and foremost, talk through your value chain and make them understand the vision, what you want out of your business. Once they align with your objectives, it becomes very easy to, ensure that entire business becomes green. But this does not happen only by letting them know that what is to be done. Go one step ahead and focus on their training programs. So you know that what are the problem areas for your suppliers. Accordingly, please plan targeted training programs for suppliers to foster a deeper understanding. Once they understand why this kind of data is essential, how I can, find out this data, how I can calculate this data, it will be very easy for them to give out the kind of data that you are looking for. Easy to use, collection tools and templates will, go a long way in collection of uh, uh, accurate data you're on here. So when you have user-friendly templates for data collection, then people also, feel happy and less challenging to give out the kind of data. If there are some calculations involved, please provide, proper formulae and explanations as to how to calculate. Also, alternatively, let them come back to you and ask. Automated data collection and validation is also, where a large number of vendor partners are involved, and majority of them are matured enough to go and understand digital transformation. Businesses can make use of digital transformation to efficiently collect data. This reduces errors and ensures that in a timely manner, your data is collected for your reporting. There are certain best practices for overcoming reporting challenges. So first and foremost is there is a resistance. So, you have to remove this resistance and this reluctancy by making them appreciate and understand that why BRSR, why this data, and why we have to give out this kind of data. Then you have to have assigned delegates, create teams, and assign certain aspects of report collection to them. Once you give the responsibility to the Sparks, this will reduce the overall confusion. Also, because a defined set of people are, doing the work, duplication will be avoided, and automation will further reduce down the manual labor. Defining clear objectives for a business is very important. When you have SMART goals in place, then you definitely know what you wish to achieve and in what time frame. This, you can also give clarity to your stakeholders, shareholders, and let them contribute to your vision. Data integrity and assurance. So once you are sure that my data implementation system is robust, it is in place year on year, I'm having a definite data which is reliable, please go for assurance, because this will give your stakeholders more trust and confidence. Also include stakeholder centric reporting. So actively involve your stakeholders when in your reporting process. Give them surveys, feedback mechanisms, so that they give out their concerns, and then please use those in turn to improvise on your reporting. Last but not the least, adaptive compliance strategies. So please establish a proactive approach wherein you include regular trainings. Whenever there is an update, you ensure that all the relevant stakeholders are updated and they understand. This way, you will be constantly compliant and you will be able to easily adapt to new reporting requirements as the landscape changes. I'll just take a minute's water break. Yeah. So there are surveys conducted for top 150 companies. This is a very interesting scenario that how top 150 companies have fared when it came to reporting on essential indicators and leadership indicators. So key insights into essential indicators, when we summarize, we see that of the 150 companies, 36 reported exceptionally. Like they reported more than 95% of the essential indicators. 103, reported adequately. That is in the range of 85 to 95% of the essential indicators. And the 7 had an above average reporting, which included 70 to 85% of the essential indicators. So the proportion of companies who reported adequately or exceptionally well belong to, healthcare, industrials and IT. And the lowest ones are, financials, consumer, discretionary and consumer staples. Naturally, when we see this data, we understand that healthcare and IT, such sectors are very pro when it comes to management of data. So, and when it comes to financials, I think there is still a lot of confusion in reporting. Consumers understand that there's a huge database, and therefore, unless and until they manage their data very effectively, they will not be able to, take up the questions. So this also sets a trend for us to understand and imagine that healthcare like and IT like businesses which are more organized, which are more compliant, which are always on the toes to manage their data are doing exceptionally well when it comes to reporting. So key gaps that were observed, with respect to essential indicators include number of days of accounts payable. This is very strange because everything must be recorded, and you must be having standard number of days for payments. Then details of concentration of purchase and sales, and wages paid to person across rural, semi-urban, urban, and metropolitan locations. So this one last wages wala thing also makes us wonder that are we dealing with only the urban setups? Are we not willing to take a step ahead and give equal opportunity to those who come from a semi-urban or rural background to involve into our businesses, so that we in turn improve their lives as well. So inclusivity for rural is something that businesses should look forward to. Similarly, key insights in relation to reporting on leadership indicators also, has some interesting insights. So 94 out of 150 companies studied reported exceptionally or adequately. This again comes to healthcare, financials, IT, industrials and material sectors. Obviously, they are more organized with respect to their data management and compliances. So this comes as a not as a surprise, but definitely as something which is pleasant because they are able to answer leadership indicators without hesitation. 39 out of 150 companies reported gaps. And the gaps, majority of the gaps comes on things like LCA. Life cycle analysis is still a challenge for majority of the businesses. When you come across BRSRs, in many of the BRSRs, you'll find that LCA has not been addressed. Then keeping a tab on your water usage. It begins with understanding the definition of water usage. That what is water withdrawal, what is actual water consumed, are you dealing or operating in water stress areas? In these areas, and what special measures are you taking to ensure that you are replenishing the water supply, or what is your plan to make your business run as usual without stressing out the water resources in those areas? All these questions are still not getting answered. Assessment of value chain partners on environmental impacts is again another challenge as a leadership indicator which businesses are facing, because here businesses are still struggling with their own scope 3 emission calculations. So going one step ahead and mapping their value chain partners is really a big task. That is why dedicated ESG teams come handy when it comes to such kind of challenges, wherein your ESG teams can align with your vendor partners, give them trainings, and then start getting data from them on their ESG performance. So in a nutshell, this is how, corporate India looks like when it comes to top 150. So we can say that, healthcare, financial, IT sector and material sector is doing very well when it comes to disclosing. Whereas, certain other businesses, especially the manufacturing businesses, lag behind when it comes to uh, giving out data. And majority of the gaps in data disclosures around life cycle analysis, water consumption, value chain partners. So these are all the important aspects that businesses need to take care for better disclosures in coming years. With this, I think we have come to a stage wherein we will have to understand further that from assurance point of view how better the businesses can perform. Handing over to you, Priya.
Thank you, ma'am, for sharing your valuable insights on BRSR, BRSR core, and the performance of top 150 companies, along with the real examples and challenges. Thank you, ma'am. So now I would like to invite Mr. Aniket to take the assurance element of this webinar. Over to you, sir.
Yeah, thanks, Priya. And thanks, Kiran, for that excellent perspective on the BRSR and the reporting framework and what it entails and how that can be, improved. Uh, so as businesses, and thank you everyone for joining in at this, phase of the day. It's afternoon, and thank you for joining in good numbers. Yeah, we can move on. So yes, as businesses around the world are navigating through the complexities of a rapid, changing environment, one thing that stands out is the, significant rise in ESG-related regulations. Governments, regulators, and market bodies are implementing robust frameworks when it comes to ensure that companies are held responsible for their environment, social, and governance impacts. From the European, CSRD to the TCFD and the United States SECs, we are witnessing a global shift towards mandatory ESG reporting. And these regulations are not merely administrative exercises; they are in fact, tools to align business practices with global sustainability goals. So it was apt time for even for India to come in and bring in its own sustainability reporting framework, and that's why we have BRSR. So we see that there has been a significant increase in the regulations all over the world, not only in India per se, and India has taken a very cautious approach by also in taking in assurance at this very early point of time. So yeah, so we see that a lot of importance has been placed on assurance as well and the credibility that it brings in. Next. If we look at the ESG reporting ecosystem that is used throughout the world, and we see that there are some global goals and principles which form the very basis of this reporting. There are, so to name a few, there are UN Sustainability Development Goals, there is greenhouse gas protocols, then there are NGRBCs, that's National Guidelines on Responsible Business Conduct, on which the BRSR framework is designed. They provide light or provide a direction to where these sustainability aspects or sustainability initiatives need to go into. We also have the reporting frameworks, the mandatory reporting frameworks or the reporting frameworks which give us the direction in which the companies might have to come up with information, or the best way in which the sustainability information can be brought out to the world. To name a few, there is a GRI, there's a global reporting initiative. We have BRSR for India, the SASB, TCFD, and integrated reporting, in which we see a lot of companies right now are reporting in an integrated way. So a lot of reporting frameworks are out there for us to really select whichever suits us best. Also, there are different ratings providers, that is ESG rating providers like EcoVadis, Bloomberg, MSCI, CDP, actually, which you usually take a look at the ESG reporting that has been done by the company and give them the ratings, so that any any investor, any consumer, or any other stakeholder would be in a position to to compare this with similar kinds of businesses and take their decisions, or take a complete view of where they are from an ESG perspective, and bring in that clarity. Last but not the least, we have the verification agencies, or the verification standards, I would say, which provide the way in which these ESG disclosures need to be assured or audited in a way. We generally see that ISAE 3000 has been the most common standard out there, which sets out the way standard assurance engagement needs to be taken gone into. We also have accountability AA 1000 AS, which is also a sustainability standard, assurance standard, and we see a lot of companies going for this standard as well. We'll take a complete view of the ISA 3000 as we move forward. Just to take a look at what the BRSR or the SEBI circular, for that matter, mentions. We know that we have already seen the 9 ESG parameters which Kiran mentioned, and these 9 ESG attributes are the attributes which will be going for reasonable assurance, which have gone for reasonable assurance in the last year. And the top 150 listed companies have already gone through the assurance assignment or the assurance engagement, and they have already disclosed their ESG disclosure in the BRSR. So I will not touch upon much into it, and we'll quickly move on to the assurance requirements, which as I said, have already kicked in from last year. Top 150 listed companies have already disclosed BRSR with the assurance requirements. This year, it will be the top 250 listed companies, top 250 listed companies as per the market capitalization as on 31st of March 2025 will go in for mandatory assurance. This number is gradually increasing, as you see. From financial year 25-26 it is 500, and from financial year 26-27 it is top 1000 companies. So for BRSR core, and specifically with respect to the 9 ESG parameters, the companies are required to mandatorily go for reasonable assurance on the BRSR core KPIs that we saw just now. Obviously, the value chain assurance requirements have also come in. The only difference between the core BRSR core and the value chain requirements is that while BRSR core has been has to go through a rigorous reasonable assurance engagement, value chain being the very first time it would be this will be experimented, or this will be taken by the companies. They have maintained it only for a limited assurance, and from 24-25 it will be the disclosure which kicks in. The companies of the top 250 companies with market capitalization will have to disclose on value chain requirements, or the on a mandatory, not on a mandatory basis. The assurance will not be on a mandatory basis, but they will have to disclose on these for this information. From 25-26, obviously, they will have to go through the limited assurance of these value chain disclosures on a comply or explain basis. Just to give you a brief on what the typical assurance engagement looks like, is that normally it is a 3-party relationship between with the practitioner, the responsible party, that is the company which is disclosing the BRSR, and the intended users. Okay, the subject matter would be like subject matter would be like anything, like in this case, like in the BRSR, it is the GHG footprint, the water footprint, and other aspects which have been defined in the in the circular of SEBI. Criteria again has already been defined by BRSR as to what really needs to be looked into with respect to the data that is required, as well as the assurance approach that needs to be taken. For many other ESG disclosures, it could be the GRI standards or the integrated reporting frameworks and other KPIs that would be really mandated by those very standards. Evidence. This is the evidence information that the assurance practitioner uses to come to a conclusion as to whether it has there is a complete and true and fair view of the information has been brought into, whether it is accurately or whether it is a completeness perspective. Evidence is something that the practitioner will be looking at. And obviously, the outcome of this exercise is the assurance report, which will give a conclusion or an opinion of the assurance provider, whether this disclosures are correctly mentioned, correctly provided, or there are any qualifications or there are any problems with the kind of information that has been presented in the report. So coming to the need for assurance is obviously it brings an increased recognition, trust, and credibility. That is the most important thing for which assurance has been brought into. Given the nature that the information it handles or it is disclosed, it is imperative that this goes for assurance, and there is a third-party validation. Which ultimately reduces the risks and increases the value of the information that is provided. It improves stakeholder communication. It actually helps in building a robust data gathering processes, which are equipped with the required internal controls, in place. Improved top-level engagement. We see. In the last year or so, we have seen that although the functional people have been involved in the BRSR framing of the answers and building up the responses, but we still see a lot of companies not involving the top level people or the board of directors, for that matter, in cases like like giving the strategy or the vision, mission statements, and coming up with the goals and providing that kind of monitoring that is needed for this entire ESG framework that we have. Again, assurance actually helps in addressing a lot of challenges that we see. Obviously, it provides a lot of confidence in the kind of data that you provide. As it is going for third-party validation, it brings in that much confidence in your data, the processes that you have implemented, the kind of stakeholders that you are touching upon. They are also very in a comfort level as to they can rely on your information and be very much comfortable with the kind of data that is provided. So all in all, we know that assurance has been is a concept which is well settled in the financial information spectrum. Likewise, it also needs to be settled. We still see that the kind of processes and the kind of internal controls are still lacking when it comes to ESG data. But nevertheless, with the coming years, I foresee that this challenge would also be will also be addressed by the companies with the kind of framework that we have and the assurance requirements also kicking in. Yeah, Dinesh. Typical assurance process is somewhat similar to what we have in the financial stream as well. Over here, we usually take an initial data walkthrough select sample sites if there are manufacturing sites that the company has. We select sample sites for a review. We might go for physical inspections or physical audits at these particular sites. We review the stakeholder engagement and materiality, which gives us an understanding of what are the top level topics or material topics that the companies have come up with. Over here, I would also like to highlight that in many companies we did not see a formal materiality assessment being undertaken. And when that is the case, it usually signals that there has not been a good internal control over the entire data, and there has not been a good monitoring system, and a good overview has been taken by the board of directors or the higher up managements with that in place. So we go on and review the data that is being presented. We take a look at the processes, the data collection practices, what sources have been used, what are the controls that have been put into place. I'm specifically emphasizing on controls over here because the reasonable assurance is one thing which will definitely focus on controls, and we'll take a look at what internal controls mean in our later stages of the presentation. We review the selected statements and claims of the report. We do our analysis. We go back to the financial data, because that is also a good source of information that we can rely on, and make comparisons, or look at what that has come up with, and try to relate or try to link the information that is presented in the BRSR with the kind of information that we already have in the annual report. A lot of interviews and questions are posed to the functional heads, to the people down line who actually deal with a lot of data from across the organization, and we try to come up to a conclusion as to whether it is a good that reported data is giving a true and fair view of the ESG practices of the company or not. Yeah, Dinesh. Next. Okay, so the BRSR circular of SEBI has named ISAE 3000 as the assurance standard for assurance practitioners to follow. And as you can see, this has come up wherein 4 different agencies have come together to form this assurance standards, wherein we have Assurance Standards Board, the International Auditing and Assurance Standards Board. We have the International Accounting Education Standards Board, which also brings in also the Ethical Standards Board. If you see, one important aspect that has been that is included, and which these practitioners need to follow, is that they need to have a quality check mechanism. They need to ensure that whatever conclusions have been drawn are being internally checked, either by their own partners or through different third parties, to ensure that there is a lot of independence and a lot of focus has been placed whenever the practitioner is giving any conclusion or opinion on the ESG disclosures. So you can see it is a good ecosystem out there which is bringing in standards to ensure that the independence is there, the quality of the assurance piece is being retained. Yeah, Dinesh. Just to deep dive into ISAE 3000, as it is the most common assurance standard that is used worldwide. It typically talks about the 2 assurance ways, that is a reasonable assurance and limited assurance. Reasonable assurance, as the name suggests, it includes extensive procedures. In this, the risk of material misstatement is reduced to a very low level, to ensure that whatever is being presented is very much credible and trustworthy. And we have seen the internal controls over here. So the main point is internal controls, wherein we include the SOPs, the data measurement collation techniques that have been used, internal reviews, and outcomes and corrective actions. And if there is any monitoring or reporting process being there involved in all the ESG information that has been brought up. It involves exhaustive evidence gathering procedures. It will entail a more comprehensive sample. We will see a lot of evidence around that. We'll try to again go to the financial information to try to get those linkages in place, wherein we can definitely see some gaps around that, and bring out the correct picture. Opinion for reasonable assurance is given in a positive manner when we say that the management assertion on that particular subject matter is properly prepared. We will definitely look at the internal controls when we come to the slides in the next slides. The other part is the limited assurance, whereas the risk of material statement is also reduced, but not comparable to that in a reasonable assurance. So in a way, there are fewer tests, there are smaller sample sizes that we use, and the assurance conclusion is whether the subject is plausible against the criteria. That is the difference that we see. And that is the reason why value chain disclosures, and given that it will entail a lot of information, there will be a lot of back and forth with the value chain partners, both upstream and downstream, that have been kept at a limited assurance level at this point of time. Evidences would be in the form of evidences would definitely be seen, but for a fewer samples. There will be inspections, recalculations, and analytical procedures. A lot of analytical procedures will be there, like trend analysis. There are large variations between the two comparable years, and so on. Conclusion for limited assurance is given in a negative manner, wherein we say that the management assertion on that particular subject matter, which is subject to assurance, was not properly prepared. So that is the basic difference between the two levels of assurances. Challenges in BRSR assurance: obviously, the kind of information that the BRSR holds, it's significantly different from what a financial information or an annual report is about. There are a lot of differences in the control and influence, wherein we see financial information more on the control aspect, whereas BRSR is more on what influence it makes. Financial information is more on the quantitative aspect, whereas a lot of qualitative or narratives are present in the BRSR report. In financial information, we take a look at the historical information, whereas much of the information in BRSR is forward-looking. Again, there are novel data streams. We'll have to rely on different streams, not really very much formal in the way they have been built. But then, yeah, we will have to take a look at that. Talent availability and competence, whether they understand what kind of information is being provided. Immature systems, I again say that the kind of internal controls and the maturity, it's still to be seen in the ESG or the ESG information as well. Reporting relies on third-party data. We'll have definitely see that when value chain disclosures become more normal, and with the 250 companies reporting this year, there's a lot of reliance have to be placed on third-party data. Demands for external assurance, obviously, with the kind of and the fee and the parameter that we have, there is increasing demand for external assurance. Overall, we see that there is a lot of BRSR awareness gap in the corporates at this moment, we will still see that ESG data collection issues, because a lot of departments are involved in the kind of information that is needed. Data transparency and accuracy risks are obviously there. Need for strong internal controls, as I said, it's still to be it's still to come in force, and the companies need to really think about how that can be done. Higher ESG investments, obviously, bringing in more accurate data, or going to technology when it comes to producing or generating that kind of data will require investments, and not actually in monetary terms as well, but also in the kind of time that we would like to invest. It would be more. Coming to preparedness and bridging the gap between reporting and assurance, first thing that I would say is understanding the assurance requirements. Studying the circulars or the SEBI instructions well, and coming to a conclusion as to what particular direction that we would need to take. Formalize an ESG charter. Obviously, for an ESG charter, as I said, there needs to be a proper guidance from the top level management, be it who takes the responsibility, if there is a committee, how that committee will be working, how many meetings will be held, and what is a quorum. Will there be an ESG mission statement, the goals setting, and all that stuff. There needs to be the ESG charter will be providing a very good overview of that, and it acts as a Bible for the people down the line. Formalize the standard operating procedures. This is one area which we have not seen much when we have been either drafting the BRSRs or either assuring the BRSRs. Although policies are available at the higher level, but then SOPs, bringing in those related functions within the different ESG department, with the ESG, the parameters is not yet seen. Internal training, obviously, a lot of capacity building sessions need to be provided to the people who actually handle the data. How to interpret the BRSR, that is one aspect which really needs attention. And what is the idea behind it, behind all the assurance or all the parameters that we see in the BRSR. Engage assurance providers. Yes, definitely with this assurance piece coming in, definitely that needs to be taken up. Refine data collection procedures. There needs to be critical view taken of the way in which the BRSR information is being collected. You will see that a lot of information can definitely flow from SAP and other ERPs that the company is using. And if we really look at that and place some good evidences as a backup to that data, and much of the information would be really available. Again, technology can play a very important role over here when we can bring in some softwares that will handle the GHG data and all that stuff. And all these things are possible now. Conduct pre-assurance audits, very important before going to through an assurance engagement. If we can take a dry run of the assurance engagement and what it entails, putting those hard-hitting questions to the people who have been managing the data, whether they have followed the SOPs and whether there is a good audit trail that we have, will definitely bring in a lot of change or progress in the way the data is being presented. Integrating assurance into reporting cycles. Yes, so whatever internal reporting happens there, if we can bring in assurance or the maker-checker concepts in ESG reporting as well, that will definitely boost up the quality of data. And obviously, continuous improvement through by filling up the gaps that we have seen through these assurance processes internally, and what else can be done to ensure that the quality of information is increased in a better way. Yes, as I said, the BRSR assurance for the BRSR core is there's a lot of emphasis on the reasonable assurance, and with reasonable assurance, the most important aspect of reasonable assurance are the internal controls, like we have in the financial field or the financial information. So internal control is a process effected by an entity's board of directors, management, and other personnel, designed to provide reasonable assurance regarding the achievement of objectives relating to operations, reporting, and compliance. So as you see, there has to be involvement of board of directors and management at the top level. Will bring in that clarity or the commitment from top, or the providing the authority to all the processes that will be there, and accountability towards to the people who will be a part of this entire ecosystem. There will be obviously objectives. The objective would be to bring in more clarity, more accuracy in the way the information is, and obviously boosting up the quality of the information that we have. As I said, we have seen that much of the information is already available with the corporates or the companies, with increasing use of technology or ESG or ERPs or the SAPs. It's just that we need to apply our minds and and be prepared to how that linkages can be drawn, and what kind of information can be provided. And these internal controls are really required to be built in, not only in the operations, but also in the reporting and compliance aspects of it. Reporting, obviously, we need to ensure that there are adequate controls in place to ensure that we have actually addressed what the reporting framework needs, and we are complying with the statutory requirements as well. So all in all, it is more about what kind of controls do we demonstrate, and that will lead to more comfort level for the auditor who will be assuring the ESG information. Next is the internal control, the components of internal control. I would really very quickly touch upon that aspect, wherein we see that a typical internal control has control environment, risk assessment, control activities, information and communication, and monitoring activities. So as I said, it has to be a good amount of commitment and integrity flowing from the top level management, wherein we value ethical conduct over the information. There is an oversight from independent board of directors as well. If you have an ESG committee in place, if it is headed by someone independent, someone who is an independent director, that really should add value to the ESG framework. Structures, the reporting lines, authorities, and responsibilities, and all go a long way to bring in that seriousness in this field. Obviously, competent people we need to retain, attract, and develop these people. People are held accountable. That is, if we can put this as something that they need to as their KPIs, definitely these things will bring in the kind of change that is needed. For risk assessment, we need to have clear objectives defined. Risks are identified for the objectives. If there are controls, obviously with risks also come the controls. We need to have if there are any potential for a fraud that is considered. Although in ESG reporting, there is a lesser chances of frauds that we see in the financial aspect, but greenwashing is something that we can relate to, and we need to try to avoid greenwashing to the largest extent possible. Control activities are selected and developed. Again, these controls are monitored and tested during the financial year to see that whether these internal controls or the transaction level controls or the process level controls are actually working throughout the year. So for that, we might go to the internal audit department of the company, or it could be the external assurance partners as well can help in this way. Informational communication needs to flow from top to bottom, and also from bottom to top when it comes to the reporting aspects of it. There is good amount of transparency in the kind of data, the information that is there. And obviously monitoring activities, they should be evaluated on a periodical basis. Any deficiencies that are seen in the internal controls need to be addressed in a timely manner and communicated to all. So I feel with the internal controls, if we have those kind of internal controls which are very much comparable to the financial information, we should be in a much better position to demonstrate or to disclose ESG information in a much transparent manner, and bring in the required comfort level to the assurance practitioner as well. Yeah, just to take a quick example on GHG footprint, and I believe there are a lot of companies are still finding it difficult to come up with information that would make justice to what they have, what processes that they have, and what steps that they are taking with respect to the operations that they have. So being prepared for a GHG footprint, obviously we need to know the boundaries with which we'll be disclosing in the ESG disclosure framework, or the BRSR for that matter. What are the data sources? Where will we be getting those data? What are the data collection methodologies? What all departments will be required? So these departments could be, typically ranging from high level, the manufacturing departments, to the it might also go down to the last man, or the security. For that matter, the security might be at the gate of the manufacturing facility. He might be maintaining a kind of register for the movement of trucks or any other vehicles. That could also form a good source of information that we might rely on. Monitoring and measurement systems, as I said, what kind of measurement systems, like flow meters for water, or flow meter for oil, if that is being used, calibration records, how frequently they are being calibrated, and how it is ensured that whatever readings that they are being given are should be good in a way. Risk management, what could be the margin of errors or the materiality thresholds for data inclusion. If we can do homework on that, and we should be really in a better way when we face the assurance practitioner. Comparisons and trends also provide a lot of information about the accuracy of the information. External verification alignment, even the GHG footprint or the GHG quantification can also be assured by an independent practitioner. And with that also, it also brings upon a good level of credibility. And even if you see the BRSR, it also asks a question whether this particular parameter has been assured by a third party. You have to say just yes or no and give the name of the assurance practitioner out there as well. So obviously supporting documentation and audit trails, if we are ready with these things at the very start of the financial year, and we work upon these aspects, this should be a comfortable process of the journey for the company. Obviously, linkages, as I said, more and more information would be readily available in the annual report itself. It's just that we need to have those linkages, or take those as supporting guidance as to if they are on the right track or not. So much of the information is available here. Second, we can look at the employee well-being measures that is asked in the BRSR framework, and what measures have been taken by the company. Mostly, it is the insurance policies and the maternity benefits and paternity benefits, daycare facilities, health and safety facilities. So if we are in a position to build upon the related documentary evidence, with respect to all these things and how it links to the increasing the overall well-being of the employees. That should be very much relevant. Again, safety related incidents like records like claim records, LTFR records, like treatment that has been given to the workers, number of fatalities, wherein we'll try to look at the claims that have been processed at the factory level, and such other stuff will be looked upon. Pre-assurance, as I said, will give a mock of the assurance practice, the assurance function, and it gives a good overview of where the company lacks, what kind of information is still needed, what kind of evidence would be required to bring that comfort level to the practitioner. It gives an opportunity to align with the financial disclosures and the as per the reporting framework that we would be following. It gives us an opportunity to understand the materiality and risks that we see in the entire ESG theme. It also acts as an advisory in the way for building ESG control frameworks, defining key metrics, and strengthening the ESG governance in a way. Obviously, the outcome would be it enhances the reliability of the ESG information and brings about bridging the gap between the reporting reporting and the expectations from the reporting framework or the different stakeholders that we have. Yeah. Next. Yeah, so this is a list of greenwashing instances that we have seen throughout the world or the worldwide. SEBI has in its circular defined greenwashing as making false, misleading, unsubstantiated, or otherwise incomplete claims about the sustainability of a product, service, or business operation. So if you see, we as corporates need to be very much, very much looking at this aspect as to not going beyond the line when we have been claiming something in our sustainability disclosures. Try to be modest and try to be apt at what we want to demonstrate, not really going off the board and making false or unreasonable claims. I would say we should not be going for that. And I think BRSR, for that matter, and with the assurance aspect also coming in, so that will bring in a lot of credibility and as a check to such instances. Although India does not have specific penal provisions at this moment, wherein if the companies do greenwashing or claim more than what they have been doing, there are no specific penalties out there, but Regulation 98 prohibits them from doing such kind of acts. So we need to be very much concerned about this and very much focused when we are claiming anything in the report. And assurance will definitely bring in that much credibility to the report. Yeah, and next, Dinesh. Yeah, so as you can see, AI coming in really in full force in the last 2 or 3 years, and it has touched upon every aspect of business, and ESG information is not left out. We saw that a lot of companies might have definitely gone to AI to bring about their disclosures. So the left hand side of the screen, you will see that there is a picture which has been taken from AI, that is ChatGPT for that matter. And if you see, the information is not that great in terms of the in the spelling mistakes, and although it is looking very great, but you will see that when you deep dive into it, we'll say that it is not great in terms of spellings and other stuff on the grammar as well. Whereas on the right hand side, we have a disclosure which is, we can say, assurance can bring about that change, although it will not be very striking in its appearance, but it will definitely bring a very clear and very true and fair view of what the company has taken steps from an ESG or sustainability perspective. Yeah, so with that, I'll conclude on my presentation, and we would be really happy to take any questions from the audience as well. Thank you very much.
Thank you so much, Aniket sir, to touch upon the details and the nuances related to assurance and the entire process of assurance. Now I declare the floor open for a Q&A round. Participants can ask their questions. Yes, Nitin.
Hello, hi. Good evening, everyone. Nitin here, and I'm in a very uh, comprehensively explained presentation in terms of the key elements on the BRSR and also on the assurance part. My question is around the assurance part. A small question because I'm not fully aware of that part. So when it comes to the principle 6 assurance, I mean, especially on the JG footprinting. So, is there any specific data or the references that the company should provide to the assurer, to verify or assure the data? That I mean, is there any specific set of data that we should keep in our hands to do that?
It totally depends on what to what level the assurer wants to go. It's definitely giving a more comfort around that data and to what level the data is available. As I said, and to give you an information, like if you look at the people that we generally go to is the departmental people who handle the data, and also the if we really want to do a very quick cross check about whether that has been correctly said, we can also go to the security. We would be the last person out there with the relevant data. So it typically there's no hard and fast, or there is no specific thing that we can say, but anything which will support the disclosure, in quantitative terms, mostly from the GAG perspective, that should help.
Okay. I mean, I'm understanding this. Even if we were going for a limited assurance or for a full assurance, there is no certain thing that we should, keep. I mean, there is no certain set format for it. It is like recording all the activity data which are happening in the organization and keep it ready for the assurance part.
Absolutely. Just that the controls need to be there of the information that is handled for reasonable assurance purposes. It might not be to that level in a limited assurance way.
Okay, yeah, understood. Thank you very much.
Okay, thank you, Nitin. Mr. Akshay, you can go ahead.
Yeah, hi, good afternoon, everyone. First of all, thank you for the knowledgeable presentation. I hope I'm audible. So,
Yes.
I have two questions. One is regarding the assurance part. So, as per the new mandate, or BRSR thing came in regarding the supply chain, right? For example, 2% that of downstream now will be in the value chain to need to be assured. So, what will be the assurance criteria as per this new circular? Total 2% of total sale value will be under the radar of assurance, if I understood right. And second question is regarding the small clarification on employee and workmen. If you will see in the principles, the category is divided into employee and workmen. But if we'll see by the definition, so we can go with the permanent and contract persons, because although employee can be on roll also, or workman can be on roll also and off roll also. So what is the standard practice to differentiate employee and workman?
So to answer your employee and workman, sir, I think I have given in your query form also. Small note can be given, below the question saying that, for example, take IT industry. There are no workers. All are employees. But if you see the definition of labor law, every person who works is a worker. It can be an employee, it can be a contractual worker. Likewise, you have to give a note below the question saying that, all our employees are either permanent employees and permanent workers, or we give data only about our permanent employees, and all our workers are contractual workers, which are not included in the definition of the workers. This clarifies the needful.
Okay.
For example, some may be having categories such as permanent workers and permanent employees and contractual workers. In that case, they say that this data pertains to permanent employees and permanent workers and does not include the contract workers. That way.
Okay, but just a follow-up question on this, because this we can do in our integrated report, right? Where we can put the note. But what about the XBRL? Because for the SEBI, we are giving the XBRL format only. So in which we can put out the numbers. I don't think so. There will be a provision for putting note there.
I believe there is a separate column or a cell that is provided for adding notes. I'm not really sure because I've not seen much.
Yes, Aniket.
Yeah.
Notes can be given in XBRL.
Notes can be provided, yeah.
Yes. XBRL allows companies to, standardize their information, including notes. So, sir, you can give notes also.
Okay, thank you.
Yeah.
Actually, Tata Steel BRSR report, this particular point is explained very well. Because they also have permanent workers which they have included in some degree. So I think that will give a good idea. One can go through that.
Absolutely. And if you can also look at the very first circular which came in, I think in 2021, which was a starting point of the BRSR. There is also a guidance note which is available on that. That will also give you a good idea. There are definitions mentioned in it, and probably that should help you out in some way or the other.
And 2% thing, Aniket, that's remaining.
Yeah, on that aspect, so that is something which is recommended, which is recommended by the expert advisory committee on ease of doing business. The 2% is something which is being recommendatory at this moment. It is not yet finalized or not yet being made mandatory. So this year probably it will go only with the 75% criteria which was there, which has been if you also see the circular. That needs to be there. It is a recommendatory in nature. It's not yet very much finalized. So 75% of the upstream and downstream vendors or the value chain partners will have to be reported on.
Okay, so that means till the time we didn't receive any mandate from SPI, but post recommendation, we need to follow the 75%.
Absolutely, right? Absolutely, yes. It's in the pipeline, and basically with the hardships that we foresee, with respect to the back and forth that will be needed, and the kind of information that will be there. Again, assurance aspect, what kind of assurance will be there, whether we will go direct to to these kind of value chain partners, which will be multiple in numbers, how that will be taken. That is those are some very much operational questions which are still unanswered, and that needs to be eased out in a way. And I think that's something in the pipeline and very much will be coming in the near future, if I say.
Yeah, and to add to what you just said, Aniket, sir, there is also not a consensus as to whose onus it is, to extract the data, assured data from the vendor partners. Whether the vendors themselves can, get themselves assured and share the data to the businesses, or it is on the businesses to, get them assured. There are many questions still, in pipeline which SEBI will have to clarify with time. And as the white paper says, expert recommendation, it is just a matter of time that SEBI will clarify both the things, the owners, and the percentage of the value chain partners.
Okay. Okay. Thank you.
Thank you, sir, for your question, and thank you, Madhuri ma'am, for adding on. Now, we'll take a question from Mr. Vishal.
Yes, hi. Uh, Thank you for conducting this webinar. It was a great session, and the lectures were great. So I have like the continuance of the second the question, that 2% this one value chain. So in that, I wanted to know, like for the organization organizing for this KPIs, it takes so a lot of time. So suppose now with value chain that comes part, so how will be the process of this assurance?
So, Vishal, right? Yeah. So obviously the assurer will look at the what kind of assessment have you done as a company. When I say assessment, we know whether there have been defined scopes and boundaries, whether there has been a peer benchmarking done. How have you assessed the coverage of 75% of value chain partners? And how have you finalized the upstream and downstream value chain partners for in the first place? Is there how have you gone to these people? Have you prepared a basic survey or template or questionnaire that you must have prepared and gone to these value chain partners for their feedback? Is there a framework developed for this ESG maturity and risk course? Anything of that sort? What kind of capacity building initiatives have you taken, whether through workshops, webinars, training sessions, if any, have you done? So all these needs to be documented and provided to the practitioner when he comes in, the assurance practitioner when he comes in. Then again, how has the data been collected, and what templates have been used? Whether they are sufficient for the kind of information that is needed that will go into the BRSR. What kind of training and support have you been giving? And then all that stuff will actually bring in the entire process that you have taken, and obviously it will also show like what kind of controls you have seen. You have designed to ensure that the data that will be go into the BRSR is actually accurate and is not factually incorrect. So that all this, we need to come up with a framework for all this procedures that need to be taken.
Thank you.
Yeah.
Thank you, sir, for your question. Mr. Venkat Subramanian, you can ask your question.
Hi, Aniket and hi, Mr. Aniket and Ms. Kiran. Thanks for this webinar, and the presentation is really excellent, and the content is very really useful at this present moment. And my question is in Principle 7, Joint Industry Association for Positive Policy Advocacy, how to be implemented? Can you explain in brief?
Yes, sir. So I've answered partially. For example, if you are a energy manufacturing company, it makes sense for you to align with MNRE through an NGO. You have to actively participate in, for example, say tariff determination. Likewise, depending on you should align with, the proper industry body or through an NGO, so that on all the important questions and regulatory aspects, you can, give out your say, so that not only your industry is benefited, but the community around is also benefited. So this is called as public policy advocacy, sir. Also, corporates are, expected to give out number of hours also that they have devoted to public policy advocacy for the betterment of business and community.
Thanks, ma'am. Actually, I have one more question. Is that already discussed? This 2% or 75%, which is not clarified, unanswered by SEBI. And if it is 75% as of now, the last circular. So in this, we have framework and we are conducting the assessment part. Apart from the assessment, can we do anything like in a webinar or seminar or training has to be conducted based on the result? Apart from that, anything has to be do for this reasonable assurance?
Reasonable assurance, Aniket, will you want to take it up?
Yeah, I mean, the webinars and all will go a long way in creating that capacity building with the assurance, with the value chain partners who might not be really big as well. So when you hold, when you do that hand holding with them, they will definitely understand why that is needed, what is the objective behind it, and all that stuff. But that needs to be backed up by consolidating data from them also. And with respect to the 9 key attributes which we have seen on the BRSR core, so how their operations or how their contributions are attributable to your information that will go into the BRSR. So that is which is really needed. Obviously, the webinars and all will definitely go a long way. That is for sure.
Yeah, yes, sir. That's why we are initial framework. We are framework created, and based on that, the assessment we conducted for maximum of 70 to 75% of our upstream and downstream. So
Sure.
after that, based on the result, any corrective action or any preventive action, as you said, anything has to be done added to it.
So it will depend on what kind of impact your value chain partners are having on the on your on your ESG footprint or other things. Like if we, just for an example, your value chain partners are contributing a lot to your GHGs, greenhouse gases. So you might want to understand like how that can be brought down and whether we can improve on that, or if there is any if you see some laborers being exploited from your value chain partners, how can you align them to be better better contractors or better company with respect to the kind of support that you provide to laborers. So that is where you will really think about how that can be improved and what are the gaps that you see, and how your overall ESG rating can be improved with all these things at the end of the day.
Thank you. The final quick question is the BRSR core attributes for the scope 1 and scope 2 for VCM has to be published in our report.
Yes, that's right.
Okay.
They will have to be published. Yes, yes, yes.
Thank you, sir. Thank you.
Yeah.
Thank you, sir, for your question. Now we'll take a question from Mr. Mehul.
Yes, thank you for this webinar and answering the queries. My specific query is with reference to that 75% requirement. So if we see July 23 circular 4.1, it says for the purpose, value chain shall encompass top upstream and downstream partners of listed entity, cumulative comprising of 75% of its purchase/sales. My specific queries is 75% of purchase and sales, or it is either 75% by purchase or 75% sales. That's the first query.
In my view, it is purchase and sales because it relates to your upstream and downstream partners, basically. So in my view, it should be and not or, if I'm not wrong.
Actually, for upstream purchase and for downstream sales. So whoever you choose, no, sir, And now with the new recommendations of the expert committee, as Aniket said earlier, also to ease the business a little bit, we are also apprehending a kind of a calculation wherein, say, consider that I'm considering my upstream partners, say my capital goods provider. So 2% means if I have 100 suppliers, I divide it by 2, I get 50. Then I again say that 75% of this will comprise of my upstream. So that comes to 38, roughly 38 value chain partners upstream for my purchases. So currently we are seeing in this light as to what SEBI might come up to finally, but we are not sure yet because it is only a white paper with recommendations. It was open to public till July end, I guess, for their expert comments, and now it is closed and is under discussions for finalization. So.
Okay. My follow-up query is with reference to 4.2, which states that the value chain disclosure will be attributable to the business that is disclosing. So if you can throw some light with reference to how the social parameters to be attributed to a certain business. For environmental parameters, yes, we can do.
Yeah. So, sir, social parameters, like basically, first of all, code of conduct will have to be modified with some basic ESG questions for value chain partners. Social will maybe say, you include questions on child labor and forced labor. And at least for your tier 1 suppliers, some physical audit is what we anticipate, right, Aniket? That not believing only on what database they give out, but actually going to the premises and seeing whether any social norms such as human rights due diligence is getting followed or not followed. So it is going to take some time to streamline. Basically, to begin with, we expect that some limited assurance will be carried out for value chain partners. That too, I think businesses will be given time to, come back to SEBI saying that for now this year, say for example, out of my tier 1, I am, giving away data for my first, 10 value chain partners with whom I do majority of my business. And I will be answering on these 3 attributes on behalf of my value chain partners. So we don't foresee any penalty as such from SEBI in near future, because they also understand that, it is going to take some time to, evaluate such humongous data and to come out with, disclosures. So although not clarified, but we are very hopeful that it will work in this way. Madhuri has something and Akshay as well.
Yeah, actually my query was on the similar lines, because practically if we look at the assurance, then suppose there is a assurance checking happening or whatever, that audit happening, then how much of that portion would be for the supply chain? Because getting...
That is why, Madhuri, they are saying, comply or explain, if you remember.
Yeah. No, I understand. Comply or explain, it means either you give the data or you explain why you couldn't get the data. Can I complete my question, please?
Yeah, please go ahead.
So suppose even if there is a data which is given, the correctness of that, the completeness of that, and the relevance of that, who is going to cross verify? The entity's assurer or the entity's internal team eventually who is collecting the data? Because that was my question. So comply or explain, I understand. So explain part you can forget. But then, if some data is collected, take the same example, out of my tier 1, say maybe 10 parties, we have collected the data. But whether that data is complete / correct.
That is why, it has to be assured.
Assured.
Yes.
Even it means the assurance, somebody who, suppose XYZ company
your
is
vendor
getting,
has to get it assured. Yes.
But now my vendor is not under any other compliance requirement as far as the size or the statutory requirement or whatever is required. It's a SME. Okay. In that case, he is just doing this compliance for the requirement from his customer, major customer. Okay. who is eventually getting assessed or audited for assurance. So how far this is going to go, I mean, that's what I was wondering, because there is a I mean, the main entity is assurance party or assurance agency. How far they will go, they have to go for the data collected from the supply chain side. That was my question. One question.
Aniket, will you like to take this?
Yeah, so Madhuri, obviously, if the assurance, not the assurance, but the value chain partner, if he is getting things audited on his own from a third party assurer who has a level of independence, obviously that is a good evidence that to suggest that the data it should be accurate. On
Yeah,
the
but
other hand,
then, yeah,
if he's not,
why should he do that? Because for him that is additional cost, right?
absolutely, but going forward, so every company will be coming up with this kind of expectation from the value chain partners as well. And if he wants to compete with other value chain partners, he will have to go for this. Is what I feel, because now these are still the starting phase of the ESG reporting and all the other stuff, wherein
Yeah,
a lot of
I
change is
understand. So
yeah.
that's why I said today, if I am doing the assurance for a company XYZ, and there is a PQ is in their supply chain, then why when I'm giving my report on the entity, how much reliance I have to do on the data submitted on the supply chain? Because my supply chain PQ are, they are not going to get it assured again. I mean, even collecting the data itself is going to be a task for them, because
yeah, absolutely.
yeah,
That's what I said. If they are giving that assurance report, well and good.
they cannot. Most of them will not. Yeah.
If not, then the entity has to devise some mechanism, to check their data, or to at least go to their facilities and have a look at whether what they have been, demonstrating or putting in their report is actually happening. Some mechanism of that sort will also
Mechanism. Okay. So basically, like a vendor audit or vendor quality approval process, they will have to establish some process by which they will have a reasonable assurance that the data is right.
Absolutely. And that can be relied upon by the assurance if he feels.
That
and
can be
again,
relied.
this is very subjective, and every auditor will have his own way of looking at the things. But then obviously that will bring in the credibility to the information to some extent.
Yeah. And my next question is, who decides that you are the assurer? I mean, is there any certifying body or something to become an assurer?
Not really. Now it's very much open. If you see the frequently asked questions, which are part of the circular that has come up with respect to the BRSR core, it does not really say who can be an assurer, but it says that assurer will be someone who has a relevant expertise in the sustainability field, can be an assurer. And again, it gives like whether the statutory auditor can be an auditor or internal auditor.
Yeah, I know, but because of the technical.
At the moment, there is no any certification is needed or any degree is needed. Nothing of that sort has been mentioned.
Because then anybody can get it assured as assured by XYZ, and that XYZ has to have some kind of credentials. No, so that was my question. So
again, the expert advisory committee, contrary to what you said, is like they are seeing that it is the assurance piece is being directed to a certain profession, and with the certain profession, you will obviously guess that it is directed towards the CA profession itself.
Chartered accountants, yeah. I'm also a chartered accountant, so that's why I'm asking.
Absolutely. So they want to really open it up to other players as well and bring in more assurance partners.
Yeah.
So that is where it is going.
Because of the technical part, but then that is very limited, and I think that can be.
Correct. Yes.
I understand. I did a BRSR certification course by the institute also, but then the assurance part again, everybody is silent on that.
I know. I guess.
Yeah.
Definitely.
Great. Thank you so much, and thanks both of you for a wonderful session.
Thank you,
Yeah.
Madhuri. Thank you.
Thank
Thank
you.
you.
Thank you for your question, ma'am. We'll just take one last question from Mr. Akshay as we are running out of time. And the rest of the participants, I request you to post your questions on the link, or you can directly scan the QR code and we'll get back to you through email.
So thank you, Priya, for the opportunity. This is my just follow-up question. I have received a written reply on my queries, which is raised by this scanner. So this is regarding principle 3, question number 13, in which they are asking for the complaints related to the health and safety and working condition. So in health and safety, in the manufacturing part, I'm mainly concerned on the manufacturing industries. So in this, we encourage the labor or workmen to report unsafe act and condition. If you see the safety pyramid, the base is the unsafe act and unsafe conditions, and they are also considered in the complaint. Reason being, these are kind of the complaint which can be rectified or solved within a day, within a 24 hour, within a 48 hours. So and if I as per the BRSR I have seen, if we'll take these numbers, this number will be huge. For example, the manufacturing unit is having a 17, 18, 20, 30 plants. So there we encourage to the laborers to raise the unsafe act and conditions. So just want to know how fraternity is dealing with these kinds of conditions.
So I mean, Akshay, it is absolutely okay if there is a number which is which is looking big. And to the contrary, it also shows that the company is looking at a big number of complaints, and they are actually taking steps to mitigate those complaints or address those complaints. So I always see a lot of companies coming up with that concern, whether that will look good or whether that will will be really showcasing our positive outlook. But it shows that there is a mechanism in place wherein we can the partners or the laborers can voice their concerns, and the company is addressing them. So nothing wrong in it, so the main context over here is also that no one is judging the company with respect to what they are being doing. It's just reporting at the moment. And it is also giving an opportunity for the company to do better in the times to come, is what I would say. Yeah, Kiran, you can.
Yes, to add to what just Aniket said now, I think it makes more sense if a company is ISO 45001, certified. It definitely means that, you have the safety standards in place. So, I mean, you have already identified your high risk areas. You already have training procedures in place, training manuals in place, and you have an established mechanism. But at the same time, ISO 45001 now can be replaced with OSHA 18001, which aligns with streamlining the implementation in IMS, Integrated Management Systems. So if you have, taken into account your safety related risks into your enterprise risk management, and you are continuously, on an improvisation path, it means that safety quotient is very high across your business. So there are ways and means to indicate and to explain that, you're taking care of safety. There's nothing such like workers cannot, raise their voice, or only permanent workers. Whosoever is a stakeholder in that area has the right, to write in the risk register as to their experience.
Yeah, certainly, Kiran. Thanks for the information. So all the plants. So if you will see now in safety, we have a safety committee meetings in which workmen are also there, employees are also there.
Yes, worker representatives are there, definitely. Yeah.
In which the employee, worker, anybody who is the part of the committee or who are representing the employee or workmen give their concern in the written as well. So that's why I have asked whether we need to take those complaint or random complaint also be accumulated and put in the number here.
I mean, it depends on the philosophy. Generally, a safety register is there wherein, you record all kinds of incidents. But ultimately, if you see, the data goes in the form of LTIFR only. If you appreciate.
Certainly, you are right.
Yes. So that takes care of things, I think. Reportable incidents. Does not mean that other incidents are not important. But if you have an integrated management systems, you are taking care of your safety.
Okay. Okay.
Yeah.
Now I'm fair enough.
Thank you everyone for your questions. And now I would like to take this opportunity to propose a vote of thanks. On behalf of the entire team, I extend our heartfelt gratitude for your active participation in the webinar, BRSR New Elements and Assurance Readiness for Corporates. Your presence and engagement made this session both insightful and impactful. As we navigated through the evolving element of the BRSR framework, your thoughtful questions and shared experiences enriched the discussions. The dialogue around the assurance challenges highlighted the collective commitment to enhancing transparency and accountability in corporate sustainability disclosures. So we hope the insights shared today empowered you to strengthen your organization's approach to ESG integration, compliance, stakeholder engagement, and communication. And thank you once again for dedicating your valuable time to join us. We look forward to staying connected. And for any further queries or feedback, you may reach out to the given email ID info@general-carbon.com. And for the people whose question remained unanswered, please feel free to post it on the given link. Thank you.